Welcome on into this video. This is the start of the new era in trade recaps and trade reviews. So we have recently just started a $50,000 prop firm challenge, if you will. Where right now we're in the audition phase. We need to make 10%, so we need to make $5,000 on this 50K account without drawing down to a certain level, which I will show you in a second. And the first day of the account was kind of like a trial period. I'm, still just making sure the gears are turning, making sure everything works well, and it has. I've been trading with a demo account with this platform past couple of weeks, gotten things working, but there was a couple things that I couldn't do that I could only do once I went kind of live, if you will, and that was the use of a stop loss. I had to have a stop loss on every trade, but as some of you know, like, how do you scale out? It complicates the scaling out process because a stop loss needed to be active all the time. And if I enter a new order, it wouldn't let me enter a new order, even if it was even if I was trying to get out of a position I had. If I was like, let's say I was, long 25 shares or 100 shares of a stock, I couldn't sell 50 without adding a stop loss to that sell. It made it kind of look like a new order. Maybe there was something that I could have changed back and forth. Either way, it was kind of confusing. But the grand scheme, it was kind of like you enter, put a stop loss, put a take profit, and that's it. And so I was just trading that way. In the meantime, I had been trading my normal way through Webull options. And the past couple of weeks, I've been kind of frustrated with some of the stop losses that I had been getting, taken out, and just the executions of that due to spreads. Not like it was a big deal, but it was kind of adding up, and it was kind of pissing me off that I couldn't just kind of like set the stop loss and know where that stop loss was going to be no matter what, and then walk away. Because as time goes on, right, with theta decay and how options work, right, that could change. And so it also made it difficult to calculate your R, so your R multiple, which now we're pretty much going to automatically be getting that data because now we are tracking that with our new platform. And so that's going to get played into this whole thing, which I'll show you in a second. So for example, see how I have a dollar sign up here at the top of TradeZella where I track all this stuff? If I go to R multiple, there's only one trade, or one day, but we have a 3.92 R. So we can see and track our R multiple. It's going to automatically do that for me as I now set stops and take profits and stuff inside of my trades. That may not be the perfect way to go about it. May not calculate it perfectly if I'm moving stuff around, but at least now we have kind of a place to work from with this trade, whereas we could not get that data. If I went back to dollar out and I go back here, I could not get that data from everything else because I was not tracking our multiple, or I should say it was not easy to track because I had to kind of guesstimate where my stop loss was going to be based on the share price and then where I thought the option contract price would be at that time, which I could get pretty good, pretty close, but sometimes you're just not as accurate as you may think, and things are more of a loss than you thought. Whatever, it's besides the point. Today is a day where we start on the challenge account at a $99.50 PNL. So with that said, we had essentially 3 trades. It was really 2, which I will now dive into here. They were actually very much test trades. They were not the best in terms of our multiple, and also in terms of maybe what I'll be normally doing, but it was kind of just to make sure things are working, and I kind of saw the opportunities, took them, and then we'll move on from there. So the first one was a long on SPY. Now also I want to mention too, we are using MetaTrader 5 through, I believe, Think Markets. So the way I get this sent to TradeZella, which is also a thing, and also a way that I legitimately cannot hide, it will automatically send the data. So after every couple of hours, they will automatically kind of like resync it. And so all of my trade data will come from my MetaTrader 5 account to TradeZella, and I don't even have to be here. So like in theory, I will take my trades in the morning, do the trade recap in the afternoon, and then move on. However, if I can go in there, I think every 30 minutes you can go in and manually sync it. I might manually sync it, click on the button, it'll refresh it, and then I'll have my data so I can film the video right then and there, which I may do. We'll see how time goes, how things work out, but that's kind of how it works. So technically it was 3 for 3. I mean, realistically, take it with a grain of salt, because these were not, I'm now going to craft a list of what my average position sizing would be for given stocks and just write it down and have it on my desk, because with every stock being a different price, it's going to complicate that. And so I should know, and volatility wise, I should know for like Nvidia and Tesla, for Nvidia, right? I'm not going to trade the same amount of shares that I trade on Amazon, which is a much cheaper stock than Nvidia. I might need to buy more shares of Amazon if I'm trading Amazon on a given day than Nvidia to get the same type of P&L swing. So that is the next, or that's like the one thing that I have to adjust with. But outside of that, I mean, everything seems to be pretty seamless, and I'm liking it so far. So first trade was on SPY. I'm just going to go inside of here and show you guys inside of here. I don't want to waste too much time. In the future, we will go through and we'll do more trade reviews inside of TradeZilla. I'm not going to go through that because the trade replay feature, because we have in the past. But these trades are, fairly straightforward and pretty simple. I just want to kind of go through them, and then, we'll move on as the days go through, as we kind of start trading more normally. So 5-minute chart, what do we do on here on SPY? Well, I enter on this candle right here. It'll even tell me my exact entry price. This is why I'm super pumped for this. Like, I'm super pumped. It's just shares, guys. It's not, we don't have to. The reason why we're going to a prop firm, if that's a question, is because I will be able to get access to more money and more leverage via the prop firm, so that I can trade these individual stocks and just trade the shares and not have to trade the options, to be able to kind of use less to make more, if you will. I could just go to the source and trade the actual thing, and all I have to worry about is price. I don't have to think about options, decay, this and that. No. It's just, and that's kind of how my progression has been, right? Where everyone, I feel like the past couple of years has gone from like penny stocks, small caps, to options, to futures, to Forex. It's kind of like the progression everyone's moving. Whereas when you move to futures and Forex, yes, you minimize some of the theta decay that you'll get with options, but you can still have massive leverage there. And it's still pretty, it's not necessarily as simple as you may think. And you start talking about different markets. I'm looking at the same stocks that I've looked at the past, I don't know how many years, years now, since I was like 16. It's the same stocks that I've looked at since I was 16. And we're watching them every single day. We're starting to get a pretty decent feel for how they move and stuff. And so we're trading that pretty much strictly. So what I see right here on SPY was a bull flag. I see a big push up. I see a consolidation. The high of this candle is at this 435.70. I enter here on this candle. I think I got in a bit late. I entered at 435.99, so I got in a little bit late. And then I took profits on that push up towards 436.60. I could have even got a bit more, 437, but I just want to lock it in. Just do a market buy, market sell type of deal, I believe. And that was it. So that was that trade there. I traded 50 shares of SPY. Now, wasn't a big deal, but in the future, right, probably looking at, let's just go through the risk reward calculation here, and just to kind of bring things into the rough P&L range I have been in with what I've been trading recently. Those numbers might bump up a touch, but because we have a little more leeway here. And we have to kind of make 5K, and our risk is, I'll show you the dashboard here in a second. But if I enter on this break at, let's say, 435.80-ish, and then the stop loss is here, 435 roughly is the low of this consolidation. If I trade 100 shares of SPY, I'm risking about $80. And then I'm looking for maybe a dollar push up. And so, you could have got that because you got to push to 437 easily. So you could have got, $130 of gain for an $80 risk. In theory would have been a logical spot for that trade. So that was that. And then this one was where I kind of went a little bit, not larger, but I played it with two different positions. So there's two positions here. One was a $35 P&L, and then the other one on Meta was a 44. just kind of combine those two because I entered it twice. It's going to track it as 2 trades, but I entered technically twice. This may happen, but I'm not going to scale in. I will be scaling out. I'm not going to scale in. In this case, because I scaled in, it tracks it as 2 separate trades when it really wasn't. So I'm going to jump over to Meta's chart, which I have pulled up here as it is. And so what I saw was I'm looking over at SPY, and SPY has pretty much done the same kind of thing, but it's now doing this on SPY. So SPY is trending down a bit. And Meta, I'm looking at inside of here, volume profile wise, and also inverse of my strategy, right? How many bull flags have you had? And you had many, many of these bull flags to the upside that Meta was kind of breaking. And once we start to push up here, now we have a daily resistance at near essentially not an all-time high, near a prior high of this year on Meta, up around 325, 326. And so then we see this break of consolidation, big upper wick, and then essentially a breakdown. I entered in on this breakdown candle right here, and then the stop loss becomes high of day. And then I eventually moved that stop loss to, as time progressed, as we had some more breakdowns, we got down under here to over here, over this higher upper wick. So very tight stop on that, but I entered twice. I entered once here, and then I entered again on this candle as we kind of came back up, put in a lower high, and then got hammered down, made that new low, boom, enter it again. This is the inverse of the strategy essentially, but also fair. Like it's essentially like something that I may play into a bit more, but I wanted to just kind of test the waters with some market sell or some market shorts, and then some, how I can adjust my take profit and stop loss from the platform. Super easy to do. Something I could talk, I guess, like there's videos and tutorials I can do, or I can, cover that in the future, but super straightforward, super easy to do. So that's what I decided to take. And then I had take profits, really looking to target this volume profile gap area. So like down towards 322.25 was like kind of my last take profit. And that was really it. Now it's actually going for more. So the idea was there, right? The idea was logic. It made sense, right? And even you could have reshorted it here technically if you are that type of trader. I'm not. So, this is even a risk too, because, we could have very well just seen this go like this and then go for more later on, which is fine. And again, is that a big deal to me? No, because no matter how long the consolidation is, my risk is going to be the same. If you had a massive consolidation like that, the problem that I have too, or that I had with shares, is that if, let's say, Meta does this, right, there's absolutely no chance I could stay in that trade. Not a chance. No way. Maybe there's a way I can build out my strategy that I could stay in if we consolidate like that all day. Because the problem is theta decay kills you. Even if I'm buying next week contracts, theta decay kills you. But you could, in theory, stay in with shares, have your stop loss here or wherever the stop loss I decide to be based off of the prior history of the chart, whatever. And if it does kind of have one of those days where it, has a long consolidation and then rips up into the close, you can capitalize that and then just kind of milk out some extra gains. So that's kind of what it's all about. So this one I will put in as this was inverse. So it was actually a failed breakout, not necessarily in a larger downtrend, but I'll add that in there in a second. What I do want to go back to is this is the dashboard. It's on Surge. So the platform I'm using is Surge Trader. I think I'll leave a link to them below. There's a lot of prop firms out there. This one was the one that I thought was catered pretty well to shares. And there's a lot of stocks you can trade. Technically, you're trading CFDs, but a lot of stocks that you can trade on their platform or through MetaTrader 5 and Think Markets. Like, there's a lot of stocks you can trade there. And the reason why I'm thinking that is interesting is because of swings. I will come across, share swings in the future. I'm quite sure I will. And it's something that I want to dabble into and potentially trade more often. And there was a couple opportunities that I think we had the past couple months that I'm like, it would be kind of cool if I could have traded, mRNA short, or I could have done this short or that, or this long or that, And it's just tough with options because you got to kind of pick a date, and it challenges you there. When shares, it's a little bit easier. The chart's a chart. Set your stops, set your take profits, and let the chart play out. And you can even look at weekly charts, and not have to worry. And therefore, with something like this, I could throw, a more sizable amount of money at it, let it sit, not have to worry about that taking up my buying power personally, and just let it do its thing. And so that was the idea. Not to mention, it's also a write-off with the audition fee that I paid. It's a write-off come end of year. For me, not necessarily, I guess, for everyone. Maybe it is. I don't know. Talk to a tax guy. I'm not a tax guy, but it is for me. And so that's what I'm, that's why it made sense now. I did get a discount. There will be more discounts, I'm sure, come as we get to Black Friday time frame. Maybe there'll be better discounts than what I got. Probably will be. But, in the grand scheme, I'm not going to worry too much. A couple things I did pay for additionally. I did pay for a no stop loss option. So I am not required to set a stop loss on every single trade. And I also paid for a 90-10 profit split. So if we pass the audition, which in terms of the audition, here are the metrics. So we've got a daily max drawdown limit. This, I think, resets technically based on my new, as tomorrow, as I'm going to be up $100, right? This resets. So I can't fall, for today, I could not drop my account below this level, below 47.5. My max, or my total max drawdown limit, this actually continued. This will go up as time goes on. So I cannot lose, essentially, what is that, 8%? I cannot lose 8% from where I am. So which this is where things can be kind of a challenge. If you go through a tough period and you're in drawdown for a while, you can't lose 8% of your account. Now, I don't think that that's a massive deal in my case, but for people who are going to be more aggressive with these things, it's pretty easy to fall into that. It doesn't take very many losing trades to fall into that. As you've seen the past couple of months, I really only started documenting these trades since August, which of course those past 2 months are probably the worst 2 months that I have had this entire year trading this strategy. Even that, we never came close. We would have never come close to that type of drawdown. So based on some of those weeks. So I'm not that concerned there. Of course, if I start going in larger, then I could. But if I trade the way I've been trading, I think I should be totally fine. So now our target is we have a 50K account. We are trying to get to 55K. That's the target. Once we hit 55K, cool. We can, here's our rules, making that 10% target, and that's the deal. So yeah, that 5% hard breach is the daily. If we lose 5% in a day, they're going to essentially say you failed the audition. Or if we have a 8% drawdown from wherever our account was at one point, they'll cut you out. Now, those are, the rules I think are fair. If you are someone who is trying to just, do these things in a day or two in a week, they're more in danger. For me, the time frame here, I don't really have a time frame, to be honest with you. I don't care how long it takes. If it takes 6 months, if it takes 6 weeks, if it takes 7 days. If it takes 7 days, then I would be going in too big. I'll tell you that. So we'll see. We're looking to be in that range of, P&L days of, a couple hundred. I'm going to try to keep the same rules of if we do have a day where we are down 250, and that's probably 2 trades max, or down $200 off 2 trades, then we need to rethink the strat, or to rethink things, make sure we're aligned. And if we are still aligned with the market, half size from there. So our max day should be 250. That may need to be adjusted when I say that, because, we may be able to kind of stomach a max loss day of 300, and, maybe we have more consistency in our green days of a couple hundred. And so maybe it makes sense, but I will see. I think that I'm going to keep the same general rules on the backside as the options. There may be some learning curve the first couple of weeks, but I think what I'm going to do to combat that learning curve is just play it smaller, play it safer, and just kind of go from there. So super pumped for this. They also will track some things. I'll leave a link to them down below this video. I would not recommend just signing up to a prop firm randomly. I would recommend doing your research. I did quite a bit of research, and this is one that kind of came to me as for what I want to trade, for what I'm looking to do, this made the most sense, but not for everyone else. And then also, there's a ton of prop firms out there. This one's been around for a couple of years now. I believe they guys had their 2-year anniversary. A lot of them are new. Got to be careful. There's a lot of shady stuff going on with some other prop firms, and there's been some news. But as long as you're kind of aware of that, that puts you in a better spot. And then also, they will most likely and almost certainly have Black Friday deals. So as you get to holiday periods, they will consistently try to make, things cheaper, give you discounts. So if you can get a discount, I would do it when you get a discount. I was able to get a discount, small discount, but I got one, and that's why I decided to sign up now versus wait. And also the past couple of weeks have just kind of like made me scratch my head and say to myself, based on the data that I have gotten objectively, there have been multiple opportunities where I got stopped out when, technically speaking, the price action or the stock price never got to that stop point, but the options got to my stop point, and then this thing reversed and went back. And so I'm like, I want to avoid that, keep it clean. Doesn't have to think, less stress inside of each trade, less thinking of like, oh, well, if the price goes to there, what will the option be? No. It's if the price goes to my stop loss, which is the price of the wick or the low or whatever I'm looking at, it stops me out. And if it goes to my take profits, it takes me out. That's simple as that. So there you guys have it. That is today. That is essentially where we're at. So I have added this in as I had my Webull main account and then the Surge Trader 50K account. Here is my Surge demo account that I got. Technically, this is a demo account, but from now on, I'm going to leave it up like this. From now on, there will be I will not be trading on Webull options. I am going to be setting aside the Webull account. I know this is a long video, but I thought it was worth at least explaining all this stuff. The Webull account is now set aside for small cap swings into end of year. I have not picked any yet. I have not done much research at all, but I think that was like kind of like, hey, what am I going to do with this Webull account? Well, perfect. Now I got a reason for it. I got a use for it in the meantime. So that said, or it's almost like an emergency fund too. I can think of it that way. That said, that is today's trade recap. Technically, it was a $99 day. And I will mention too that I am not like the money prior. Like this was technically like real money, like mine. This is not necessarily my money yet. I can't take this money. I have to pass the audition to then become a funded trader, if you will. So that's what I have to get to first to get there. So once we hit 55K balance, we will be technically a funded trader. So that's the goal. And we cannot draw down to these levels, which we will adjust, of course, as we kind of move up, if we move up, and we shall see. Thanks so much for watching. Again, links, resources to TradeZilla, where I track all the stuff down below. I'll leave a link to Surge Trader down below. Anything else that I use it. So if I like it, or there's a reason why I'm using it, I'll likely leave a link to it as the resource down below. Thanks so much for watching. And hopefully these videos become more interesting, because now there's like a goal here. It's not like kind of just doing our thing. Like we kind of have a little bit of a goal, although I'm not like pushing pace because I got to get there by a certain day. No, there's no rush. There's no rush. And that's why I think a lot of people within the prop firm, space tend to rush. And, I think it could hurt them in the grand scheme, right? We're ideally just going to try to, with as little, friction as possible, move from trading options to trading shares, which I already traded options based off of the share price. And now we're just eliminating the options and we're just trading the shares. We're going to the source. So it should be a simpler approach once we kind of iron out some of the minor things. Thanks so much, guys, and I'll see you in the next one. Peace.